Up next on Way of the Renaissance Man, investor Kevin O'Leary enters the Renaissance Man Shark Tank. Welcome to the Way of the Renaissance Man podcast. This is a show about ideas, personal empowerment, and celebrating the rational life. Our goal is to help each other discover the tools needed to better focus our minds, integrate our thoughts with actions, and live the lives we really want. I'm your host, Jim Woods. Kevin O'Leary, also known by his nickname Mr. Wonderful, is one of the stars of the CNBC show Shark Tank, a favorite TV program of this entrepreneurial Renaissance man. In this episode, I turn the tables on Mr. Wonderful as he enters the Renaissance Man Shark Tank to talk about his new company, cryptocurrency trading platform WonderFi. The interview took place on the cusp of an interesting time for cryptocurrency, as the big June 2022 swoon in the price of Bitcoin has rattled investors, along with many companies in the industry. According to O'Leary, what Bitcoin and other cryptocurrencies really need to flourish is, ironically, some industry regulation, or as he puts it, that's when the real money is going to come into it. Along with WonderFi CEO Ben Samaroo, O'Leary explains that despite the hype of cryptocurrencies, the big money players such as pension funds and sovereign wealth funds have yet to embrace the asset class. Once this happens, which will take a regulated, compliant, and transparent platform such as that provided by WonderFi, the big gains in cryptocurrencies will really begin. I very much enjoyed my discussion with Mr. Wonderful and his interesting partner Ben Samaroo, and it couldn't come at a more interesting time for the cryptocurrency industry. And now, my interview with Kevin O'Leary and Ben Samaroo. Now, I know, Kevin, you've been in the public eye for quite some time. Of course, the great Shark Tank, one of my favorite shows, and I know a lot of my listeners and readers love your work. So with that, I'm going to put my Kevin O'Leary hat on, my Shark Tank hat, and I'm going to say, pitch me WonderFi.
So my investment thesis around crypto is that it's going to be one day regulated, and that's when the real money is going to come into it. And for all the excitement around Bitcoin, it's only 800 billion, which, by the way, is nothing. It's a rounding error in terms of sovereign wealth and pension wealth, which is where 90% of the money is. And so they're not allowed to buy Bitcoin because it's not a regulated asset. Same with stable coins, same with everything. So it's very, very early. And I'm starting to see policy coming from Senator Loomis, Haggerty, Toomey. They're all of a sudden, there's these bipartisan bills weaving their way through the Hill, which is remarkable to have anything bipartisan because they understand the potential of this. And the reason you would want to be an investor in WonderFi is that WonderFi is compliant. It's a compliant platform. And so my theory is that the ones that are going to, hang on for me 1 second, okay? I've just got to let a service provider in the door. So Ben, pick it up for a second. I'll be right back.
Sure. I'll let Kevin pick up his thought.
It's a pandemic. It's one of those post-pandemic things that we all, there's liable to be a dog, a baby, anything.
Exactly.
These things.
Yeah. They don't care where you're doing, what type of meeting you're in or conversation you're having.
Before I get into that, I see that we have similar backgrounds here on our
Yes.
our walls here. So we can talk about that too if you want.
I'm sure you're far more proficient than I am.
I don't know.
I always try to improve, but yeah.
Exactly.
Good.
Well, actually, you hit on something that's a theme of this podcast, and that is always wanting to improve, whether that's through your business ventures, through your hobbies, through your personal life. I mean, that's a key element, I think, to anyone who achieves anything in life. So I'm glad you actually said that, because that's a theme that I constantly come back to, and it resonates when people do their main work as well as their hobbies and so on. So pick that up from there, Ben. I mean,
yeah, I mean, I love that point. And I think, so my background was actually as a securities lawyer for 5 or 6 years. And I think earlier in my career, just like a lot of people, you have your head down, you're focused on trying to become an expert in that. And like I can say for myself, for sure, I got lost in that. And, you lose all of the things that, give you more breadth and depth, and, things like music and learning languages and things like that. But I think as my kind of life and careers progressed, I think the benefit, I found just the enjoyment and benefit of pursuing those passions, and just kind of things that are outside of whatever your core focus is. I mean, they benefit you as a person, and they also benefit whatever you're focused on. So I think music is a great example. I mean, Kevin's an amazing guitarist. I found one of my personal favorites, which sort of caught me off guard. In hindsight, it makes a lot of sense, but I started learning a language about 2.5 years ago, and I found the benefits that I've kind of realized from that have just been so immense. And I think it's similar to learning an instrument, where it really is this different way of using your brain and communicating, and yeah, just couldn't recommend that enough.
Yeah, I agree 100%. I know, Kevin, we while you were away, we were talking about our mutual passion for music and guitars. And as you can see behind me, I've got quite a few toys to play with.
I see that. Yeah.
And I know you are playing. I remember that one episode of Shark Tank where you invested in a guy's, it was like a chord, like it was a teaching tool for guitar, if I recall correctly.
Yeah, that's right. There was also a folding neck guitar that happened as well.
Yeah. These kind of things. I mean, I consider that an example of kind of having a well-rounded persona, outside interest that you cultivate, that in your case directly resulted in in a business opportunity. But these things can happen in all kinds of things. Like, I mean, for example, with this show, I interview people like yourself, business people, sophisticated thinkers, but also musicians and artists and things like that, because that's all part of a well-rounded, like fulfilling, happy life, to not just be pigeonholed into one little thing. And that's actually one of the reasons why I like this project that you're doing now, the whole kind of crypto platform thing, because I think a lot of people get too obsessed with one element of crypto, and they're not really seeing the forest for the trees. So, and you guys are kind of you don't really care what crypto ends up being the kind of the standard, as long as they're able to access it through your company.
Yeah, we're indifferent to the price of Bitcoin or any other token or coin, because we're the exchange, we're the compliant exchange. And so volatility is what we thrive on, and we provide a spot price. That's the whole idea. And the value I was saying before I cut out for a few minutes was that my thesis is, I don't care what geography you're in the end, the relationships with the banks will be, and their clients will be, with compliant exchanges, not rogue exchanges. And so there's much more value in that, because right now, if you're talking to a Canadian bank or a bank in the United Arab Emirates or in England or in Switzerland, they want to work under 100% compliant order, because they're already working under compliance orders. And so they're not interested in getting involved in anything that's rogue. And so we're limited in terms of the services we can provide, except we're actually the only one pan-Canada. You can find other exchanges operating out of Alberta, but you can't find them in Ontario. And that's because they're not compliant. And so they're going to have to be regulated as we are. And what will happen over the next 36 months is the regulator is going to start regulating, and they're going to start forcing, people that are trading in these, let's call them gray markets, they're going to force them to register. And we think that's an important thing. And we're going to be agitating for that, because we believe in compliance and we have to invest in it. We want everybody to be compliant. We think they should join us.
Yeah, I think that's, I mean, that's always been one of the kind of concerns, fears, if you will, that that Bitcoin will come under some kind of heavy government regulation, and that'll, people like it did in China and other places. Uh, but you see the compliance issue or the regulation issue as a positive, because that allows legitimate quote unquote banks and things like that to get involved in it.
Yeah, that's the whole idea. And we think by providing this platform and being compliant and showing that it operates successfully, um, gets the banks more and more comfortable. So we think we're in the first inning, but it's not just Canada. I mean, the same debates going on in United Arab Emirates with some of the largest banks in the Middle East and England and Switzerland and Brazil. So, we're able to go to these countries and say, look, we're operating under this order, the OSC issue, the very first of its kind. Your rules are very similar. Why don't we take advantage of the fact that we've invested in all this compliant infrastructure, link to your bank, and provide you with spot pricing on whichever cryptos you elect to offer to your clients. That's sort of what my investment thesis is about this company. Not
And
just,
I like that, because I mean, it's the traditional kind of picks and shovels play in the
yeah,
space.
that's a good analogy. You'd rather own the jeans, the picks, the shovels than trying to poke a hole in the ground for gold. Get everybody to buy the infrastructure from you.
Yeah, I mean, I've owned crypto and have recommended it off and on to my subscribers, but I have to do it through the non, it's not really technically crypto. It's through the exchanges, through like an ETF like BITO or GBTC, which of course is not really owning Bitcoin.
Right.
It's owning a proxy for it, and sometimes that proxy can fluctuate quite a bit, especially in the case of GBTC. So that's been an issue too. And it's just like owning physical gold versus owning a GLD or one of these ETFs that I actually own those too. But if you really want to own the item, you want to own gold. Well, gold solved the problem of a kind of a compliant exchange. You can actually measure the gold that you buy in physical terms, and if you have a trusted person that sells it to you, you can actually know, you can redeem it for a certain amount of money. But with crypto, it's not like that. It doesn't seem like it's like that. So we need, I think the world needs you guys, and you guys need the world, as it were, to kind of, put each other together and grow this thing huge.
Yeah.
Yeah, exactly.
Yeah. Yeah. And I think we really look at these two major issues that are kind of getting in the way of adoption, or broader adoption. And it is really compliance and safety. So that comes from an end user perspective. People are scared of crypto. They hear about scams or fraud or whatever the issues are. So that's really one. And that affects end users. It also affects institutions. And, Kevin has spoken about this a little bit, but that lack of compliance and regulation is keeping a lot of capital out of investing in some of these platforms and companies like WonderFi. So as we move more towards compliance and regulation, that becomes more palatable for that. So that's more capital for growth, for continuing to invest in the technology and build better products. So though, that compliance part is really key, or the regulation part is really key. And then the other side is just usability. And one of the things that I personally found ever since I got into crypto back in 2016, I still find it now, is a lot of people within the industry talk a different language. They speak a completely different language. And so I think it comes with a lot of exuberance, which is great, but that means that when you're talking to somebody that wants to get involved and you're talking about all of these different smart contracts and DeFi protocols and liquidity mine, like all this stuff, and people are just going to say like, okay, this is too complex for me. So people feel like they're too dumb to get involved because of the level that it's spoken about. And that's not people's problem. That's our problem, right? So we need to change the narrative around it and really focus on what people care about. People don't care about, it's just like a car, right? Like people, if the automobile was never invented and all of a sudden it just dropped, you know, you drove a car dropped on your driveway, you wouldn't be, I wouldn't go to you and say, listen, let me tell you how pistons work, or let me tell you how, you know, the oil is the lifeblood of this engine, and this is how combustion. Like, I'm going to say, you know, take the top down and we can drive down the highway at, 60 miles an hour and see how that feels. And so I think it's, you know, maybe not the best analogy, but I think it's really a lot of the initial community of crypto is engineers. They are traders that have been doing that for a long time. So they care about different things than you know, new users and mainstream users care about.
Yeah, I amplify that a little bit, if either one of you, because I've noticed that's that whole crypto bro kind of, you know, in group thing. And if you're not an in group crypto guy, you know, then you're then you're stupid, or if you're a okay boomer or whatever it is. You know, there's all kinds of different, you know, pejoratives for people that rightly are asking a question: what is this all about, and why should I be involved in it? So actually, let's kind of break that down a little bit, because I know people in my audience like kind of to have this stuff broken down for them so that they really understand it. So give me a kind of like a Bitcoin or crypto 101. Why is it so important, and how does it work, and why is it so important for people?
Let me take a stab at that. The reason you would want to consider owning let's say Bitcoin, sort of in a diversified portfolio of assets, stocks, bonds, cash, Bitcoin, real estate, etc. You know, diversified portfolios. Let's go to this sovereign wealth and pension level, where I work as an indexer for those guys, and that's 90% of the world's wealth is tied up in sovereign funds and pension plans. And so they have a mandate of diversification. A typical mandate would be no more than 20% in any one sector, and just 11 sectors in the S&P, and no more than 5% in any one stock or bond. And so that's basically how you build these long-only, multi-year, massive pension plans. And, you know, the typical fund size for sovereign wealth, small fund would be 100 billion, a large one would be $1 trillion. And so if you're an oil-rich country, you would go to an indexer like me, or many indexers, I'm one of them, or at least one of my companies is, and say, look, develop me S&P portfolio X oil, X airlines, because they already have oil. They already have their own airlines, so they don't need exposure to that. And so that's what we do, and we get paid for that. We get 2 basis points to 10 basis points. That's a lot on $100 billion. So what happens is we're constantly being queried in terms of what their assets are, what they want. And so they want that. If you ask them, hey, listen, do you want any crypto in an index? And they say, well, we can't own crypto right now because it's not regulated yet. And they work in a regulated environment. They have regulation infrastructure. So they report market closes, they mark to market their positions, and it goes up to a compliance officer and all that stuff. So everybody's been talking to them. They'd start with 50 basis points in Bitcoin if they could. Some of them 75 basis points, some of them 1% in a portfolio. 1% of $1 trillion is a lot of money. And so you have to start thinking about, do I want to take my position before the regulator regulates, and all of a sudden the pension plans, the sovereign plans decide to allocate and index crypto? They may do more than just Bitcoin. They may do some Ethereum, they may do Solana. You don't know. It's whatever they're going to do. And that's the investment thesis, is why wouldn't you? The reason that Bitcoin is so volatile is for all of the excitement about, people own Bitcoin. Nobody owns Bitcoin. It's only 800 billion, and that's a rounding error. It's a nothing burger. It's absolutely nothing in the context of financial services globally. So the whole idea is, why don't you own this before it gets indexed? That's number one. Number two, I find the use case for payment systems like a USDC very, very compelling, very, very interesting. And I certainly want, and I do use it. I've been talking with our employees in our operating company. Next year, would they be interested in taking USDC in salary? And they are. And we just have to get it's much easier. I mean, it doesn't matter which country they're in. They're happy to hold the US backed dollar. And it's much easier for us on payroll. We just need to get our compliance officer on board. and our auditor, and they're saying we won't do that till we get some policy on stablecoins. So it's all pent up demand underneath policy when it comes. And Loomis, she's got a bill, Toomey's got a bill, Haggerty's got a bill, Senator Daines, Montana's got a bill. They all have bills coming. So this is, we're right at the first inning here, and it's very exciting for me. I think you gotta take a position now, not after the institutions have started buying it.
Yeah, I think that some people that I've spoken with think that, oh, well, the money's already been made in crypto. You know, I remember when it was like $1,000 a Bitcoin. I remember when it was $600 a Bitcoin. And like you just said, you're actually the only other person that I know that has said this. I've told people that not only is it the first inning, but it's barely even like the warm up, you know, before the first inning, because the game doesn't start until like you said, the pensions, the sovereign funds, until they start putting the real money in there. Just like that, it didn't start like that for a lot of these technology stocks when they were micro cap stocks, things like that, just startups. And then all of a sudden people said, hey, well, you know, maybe there's this cybersecurity thing is a thing. And they started buying stocks in that group. And so I think every asset class, every sector has kind of, you know, faced this situation. But the benefit, of course, we've had an SEC in a long time for equities. So they had advantage, but yeah, I mean, I think also too, the amount of money that goes into these things is, like you said, is very small, and hence the volatility, because when you have a low number of participants, the volatility, when some of them sell, the volatility goes up. It's just like a stock with a small float. The volatility is going to go up.
Yeah, that's right. And that's the investment thesis. And I mean, you know, yesterday there was another conference in Washington, D.C., where policymakers met the private sector, heavily, you know, attended by institutional clients, very, very large institutions. You saw Fidelity and BlackRock just last week put $200 million each into Circle. I mean, that's unheard of. I mean, they would have never done that unless they thought policy was coming. Fidelity's announced 401ks, which will allow, you know, certain cryptos in there. So I think it's really early, as you say, but for me, it's a long-term position, because I don't think of Bitcoin as a coin. It's software. Solana software, Ethereum software, they're all software projects, and software is a productivity tool. And I think at the end, you know, you want to treat it as the 12th sector of the S&P, because it will be in 10 years. I mean, this productivity is not going away. I mean, it's here to stay. So it's, you know, yeah, there's volatility. Yeah, there's rogue operators. Yeah, there's scamming and shamming and all this other crap. And there's very speculative tokens and all that. But that doesn't matter. The long-term productivity enhancements, very, very, very compelling.
Okay, so there's something that I have not heard anyone stress. I have kind of read it as a productivity tool, but no one's ever stressed that to me. So tell me why it's a productivity tool.
Let me give you an example. Let's say this is a real use case that happened to me a couple of weeks ago. In our operating company, we're about 30% in real estate. That's one of our asset classes. So we buy and sell real estate, and in different geographies. So if you want to buy something in Switzerland, you got to be in Swiss francs. So you have to take your US dollars, you have to ACH it to a Swiss bank. It takes 3 days. You have to go through a very long protocol, because we're talking about millions of dollars. And you know your client, you have to get approval institutionally to move it. Very expensive, very slow. But in this particular case, they lost it. They lost millions of dollars for 48 hours. Couldn't find it. Even they had a Fed transfer number. Couldn't find millions and millions of dollars. 48 hours later, they found it. Who gets the interest? Who pays for the fees? What about the fact that if I hadn't been able to close, I would have lost the option on that building? So all of that was being played out, 36 hours of staff time, tremendous amount of stress, trying to tell people that the bank lost the money. And I thought to myself, this is really crappy This is a really bad system. Now, if I could have just simply said to the vendor, will you accept USDC or any stable coin? I don't care what it is. I could have sent it to them in 2 seconds with full transparency, full accountability, full audit trail in perpetuity. I mean, that's so compelling that I know with certainty it's going to happen, which is why there's, $54 billion in USDC right now. And and I think the largest account size is only 60 million. So that's nothing in terms of what it could be. And so these use cases for making financial transactions more compelling are very powerful. They're faster, they're cheaper, they're transparent, and they're 100% compliant because my audit department could go look at it and the auditor could look at it and the vendor that's selling can see it. And it's essentially a smart contract. So for me, there's no question that it's coming. So I might as well own a piece of Circle, and I do. I mean, I don't know why I wouldn't want to own that. I don't know why I wouldn't want to own FTX. All of these big infrastructure plays, and it's the same investment thesis for WonderFi. WonderFi is just infrastructure, and it's compliant infrastructure. And I think it's going to be very compelling for Canadian banks one day that want to do spot pricing for whatever they decide to allow their clients to buy, because I think it'll be a limited, maybe 3 or 4 tokens in the beginning. But I think it's going to be very interesting.
Yeah, I think that explanation it hits home because a lot of people think, and which has been somewhat true, that Bitcoin and other coins have been just speculative tools for people to make a ton of money on, maybe lose a ton of money. Lately, more losing a ton of money. But the problem is that is only one element. That's like saying that a stock of a company is just out there to speculate with. No, it's there because the company is raising capital so that they can do something productive and meet a demand in the marketplace. And that's a good, I think that's a great explanation of what one thing that crypto and also the blockchain, because to me, the blockchain part of it is the interesting thing, because that can be spread throughout a lot of different areas. Like, for example, I think that would be like one of the best ways to like solve election issues. If you had somebody knew exactly where that person voted, how they voted, and could track it, things like that. And they wouldn't have all this, controversy about voting, or at least you would possibly reduce that. But there's all other kinds of, contract tracking and ownership tracking and deal tracking. So it just makes a lot of sense from that angle. But Ben, back to what you were saying about like the kind of the languaging aspect of it. It's hard to tell someone, because I consider myself one of these people. I mean, I'm very well versed. I've been doing the financial lingo for the last 25 years. But when a new thing comes on the market, I have to relearn that lingo as well. And for someone who's just a layman that, maybe just has some mutual funds or ETFs, but has heard about Bitcoin and Ethereum and, Elon Musk and Dogecoin and these, they just get confused and they get scared. They think, like, rightly so, I think they just feel so unfamiliar with it that it's kind of beyond their understanding. So tell me more how can I as kind of an investment intermediary like help to alleviate that?
Yeah, I think you're exactly right. It estranges people, and that keeps people out. And tying back into what you're talking about, people, a lot of people are drawn or have been in crypto to make money, right? To trade. You make a lot, you lose a lot. You make a little, you lose a little, and that's been one of the big drivers for adoption. I think the really important message within digital assets and within crypto is that crypto is for everyone, and the trader segment is it's one segment of many for use of crypto. And really the roots of Bitcoin and of digital assets are around democratization of finance. So that, that, I know that term gets thrown around a lot, but that really is what it is. And so I think people with all of the jargon and memes and stuff like that, like you're talking about, they get sort of, just really pigeonholed into this like trading sort of mindset, which again, that's our business, and obviously we support it, and it's the the biggest on ramp into crypto right now. But I think the bigger picture and what really gets gets people excited and gets kind of the community behind it is what digital assets and crypto can do for economies in developing countries, what it can do for bringing equal access to currency investment opportunities, and really how it can level the playing field versus traditional finance. And so I think for me, that was one of the if we go back to what got what got us into the space. I know Kevin and I will have different different backstories here, but mine was working and sort of climbing the corporate ladder before I got into the crypto world, and then being really excited that, hey, I came from nothing and now I'm in the room with these people, but then really realizing that this is so exclusive, and you have to be part of a very exclusive club to be able to get access to a lot of opportunities that that people are making money on, or that people are growing their wealth with. And so coming back to crypto and how this democratizes access to a lot of these opportunities, I think that's really where the passion and the drive is. I think a lot behind a lot of the people within the community, and then you look at real world applications and steps forward, like El Salvador adopting Bitcoin as as legal tender, and I think just last month, or losing track of time, but sometime very recently, Central African Republic also adopted it as official currency. And so you look at these economies that have really unstable currencies that look at Bitcoin and think, okay, this is whether it's Bitcoin or a stable coin, this is an amazing way for people within our country, our citizens, to be able to transact without exposure to the volatility that comes with their currency, which you see all across the world. So it's a real, it's a real world application, and something that you're just going to see more and more of. So a long-winded answer, but it all comes back to, this isn't just about trading and making money. Like there's a lot more that comes with the benefits of Bitcoin and crypto in a larger picture.
Yeah, I think that often, way more often than we should be, is we get kind of spoiled by the fact that we live in America, and that we have the stablest currency around, even though the Fed keeps on chipping away at it. But nevertheless, we're like the nicest house in the bad neighborhood, as it were, when it comes to fiscal stability, despite all our debt and our issues. But that is something that we take for granted. But if we were in a country where the currency was fluctuating way more than any kind of crypto ever did, I think we might have a little different perspective on the usefulness and utility of crypto and digital payments in general.
Yeah,
are happening in places like Venezuela. Everybody knows that, but the real potential is not that. The real potential is making it an asset that sovereign wealth can buy and pensions can buy. That's the opportunity. That's so huge, and it's I don't know when it's going to happen, but it may not be too far off, particularly for some basic large liquid coins like Bitcoin and Ethereum, maybe USDC, Solana, Polygon. Those are all of interest to large institutional accounts.
Yeah, that's so right now, what's your best guess in terms of, like, not the timing so much, and that's kind of hard to peg, but if you're an investor, like people that read my newsletters, where is the best place? How is the best way? What is the best thing to do? Position yourself, your money, to take advantage of, like, a few years down the road, or 1 year, 5 years, whatever it is, to take advantage of that with that small portion of your portfolio.
You want the infrastructure, so you can buy individual tokens, but you want to have some exposure to where you're agnostic to the price of cryptocurrencies, and that's an exchange. And so if you want a compliant exchange, that's obviously WonderFi. It's the largest in Canada, which is where the regulator in all of the geographies around the world is the most advanced. It's the only country that started with Bitcoin spot pricing ETFs. Same with Ethereum, first order for dealer brokers. So, you know, WonderFi, that's my investment thesis, that it's 2 years ahead of everybody else, maybe 3. You'll have to wait and see, but it's a great place to get infrastructure exposure and on a compliant basis, so that you're not offside with regulators.
So it goes back to that picks and shovels kind of analogy. I think also people want to own like the currencies themselves because like, as you said, these institutions are going to add at least 1 or 2%. And that, I mean, talk about how much that would be. Like if you're talking about, say, a 2% across the board allocation of sovereign funds, how much money is that? I mean, that's crazy.
I mean, we'll take one country, for example, just to give you the size of scale. There's 18 different sovereign funds just in UAE. The largest is 900 billion. The smallest is 100 billion. That's well over $1 trillion. And just, they might allocate 50 basis points. They may allocate 1%. You're talking about billions of dollars of demand. And when they index, they don't necessarily care about price. What they care about is liquidity, so that they're able to go in and out. So if they buy it 1% weighting and it goes to 2%, they have to be able to sell it down to 1%. But if it drops to 0.5%, they'll buy it back up to 1%, which just means it's a perpetual bid in perpetuity. That's why there's so much volatility in Bitcoin, because nobody owns it. I mean, relatively speaking, you know, it's irrelevant. 800 billion is nothing in the context of sovereign wealth. So I'm very optimistic that when this comes, there'll be a lot of demand, and that's when you'll start to talk about Bitcoin at much higher prices.
What kind of prices are you
I think it's
forecasting?
I mean, everybody speculates, but I'm thinking within 3 years, 100,000.
Nice. Well, that'll be a welcome development for all of us who have our toes in the water on the crypto. Okay, so what else do my people need to know with respect to either crypto in general or WonderFi specifically?
Well, I think what they should know is that we are trying to become the largest compliant operator of crypto exchanges tied to dealer brokers, and that we provide services in every geography we can. You know, we're obviously biggest in Canada now, with over 700,000 accounts, but we're doing the same, exploring many other different geographies with the same idea. And the concept is, look, provide centralized wallets on a compliant basis, provide decentralized wallets on a compliant basis, but do it on a compliant basis, so that we think long-term value is on the compliance side, because it gives you access to hundreds of thousands of customers in the banking system. We're not crypto cowboys here. We're basically trying to add a new service on a compliant basis to all kinds of different markets.
Great. Ben?
That's bang on. And I think, you know, and Kevin says this often, I think it's a really good point as well, is for people that are on the fence or sort of fall into that category of being estranged from crypto because they hear too many crypto bros talking about it, would definitely just encourage those people to just buy a little bit of Bitcoin. You know, it doesn't have to be, you know, 10,000 or 1,000, like, you know, 10 or 20 bucks, just to get a feel for it, see what it's like to have an account at BitBuy or WonderFi, and really just kind of get a feel for that. It's the best way to learn with new technology, and I think that's really a great starting point. And you know, again, to Kevin's point, what we're really doing is just creating this, you know, the best, most compelling product offering for people that fall into that category. These sort of new users that just want to focus on, you know, what's simple, make it accessible for them, make sure it's compliant and regulated, and you know, and do that in the most efficient way possible. And as we look forward to the rest of the year for WonderFi, where Kevin alluded to this earlier as well. We're the first regulated crypto platform in Canada, and we're working on getting those licenses in many other jurisdictions, US, UK, Australia, and the list goes on. So we're going to be expanding pretty aggressively to bring this compliant ecosystem to more people across the world, and we're looking at some developing markets as well. But that's really the focus for this year, and I think it's an exciting time, because we, being the first regulated crypto platform in Canada, means we are attracting a lot of more sophisticated investors that want to invest in the space and want to invest in the picks and shovels. And so for your audience as well, there might be people that are invested in crypto miners, which is really kind of the first frontier of investing in crypto for institutions and for retail. And what we're really trying to do is tell the story and really carve out the next category, which is the picks and shovels, and do that in a way that people can feel comfortable to invest in a compliant way. So that's sort of the next step in terms of investing for your everyday person.
Yeah, I think that's important. What you said is, when I've noticed that, and we all notice this, but when you actually have a little bit of skin in the game, no matter how minimal it is, you pay a lot closer attention to things. It's just like when you're a kid and you don't know anything about the value of a dollar other than what your parents tell you. Then when you get your first job and you see, oh, well, look at all these taxes that have gone by. What I thought I was making a lot more money. You realize that maybe they're taking a little bit too much of a bite out of your pocket, or you realize how little you have at that point, and maybe that's something needs to change. But okay, great. So all right, let's wrap it up here. I know I'm about mindful of both your times here, but I wanted to get kind of a more general personal note from both of you. So what is the one thing that you've learned over the years that you could tell your younger self that would be the most helpful thing in terms of success in life, success in business, success in anything? Whoever wants to start first.
I'll start. I think what I've learned, what matters the most, is diversification of assets. I mean, I've been taught that lesson multiple times the hard way, and it applies to crypto as well. You don't want to bet the farm on any one thing. You want a broad diversity of projects, because again, Bitcoin is not a coin, it's software, Ethereum software. All of these projects have different productivity opportunities to them. And you just don't know with certainty which one's going to win out in the next 5 years. And, in addition, I like the infrastructure plays. I like owning a piece of FTX. I like owning a piece of Circle. I like owning a piece of WonderFi, because they're big infrastructure plays and they're compliant. And so, you're getting a chance to get in on the ground floor of a brand new industry. And that matters. That really matters.
Great. Ben?
Yeah, I think well, there's a lot of sort of pieces of advice I think that come up when I think back. But I think one of the key things really is things evolve quickly. Technology and adoption of technology happens very quickly, and I look back to when I was very young, and the internet was first being accessed, and just having the opportunity at that very young age to be able to play around and explore what was what the internet was back then was incredibly useful. And I'm really grateful to my parents for providing access to that, even though it was extremely expensive, cost prohibitive. And now I think we're in a place where there's proliferation of so much amazing technology. And I think the best thing, not from a business, but just from a life perspective, is to, you know, to lean into and dive into those things that catch your interest. And a lot of those times it's going to be somewhat related to technology, because there's, you know, because it's everywhere. And you know, I think that that's just time well spent, whether it's just from a personal interest standpoint, or whether it's, you know, developing skills towards something that you want to do, you know, in your life or in your career. But I would definitely, you know, encourage, you know, myself and others to lean into that for sure.
Excellent. So diversify your ideas and go with your passion. Gotta love both of those pieces of advice. So with that, gents, thank you very much, and look forward to speaking with you again sometime.
Way of the Renaissance Man podcast and lifestyle website are copyrighted 2022 by Jim Woods. All rights reserved. For more great interviews and Renaissance Man resources, visit wayoftherenaissanceman.com.